Okay, welcome to BLOCKROCKET monthly startup pitch organized by Disrupt Network. So before I hand over to Benjamin, our moderator today, I would like to make a quick introduction about the event logistics. So as this event is going to be big, everyone is going to be muted except for the speakers. If you have any suggestion or question during the talk, you can join our WhatsApp group by scanning the QR code or check in the emailed reminder we just sent to you. I hope you enjoy the event today. And now I will hand over to Benjamin to start the event. Benjamin, do you want to introduce quickly about yourself?
Fantastic. Thanks, Alexandra. Let me just quickly share my slides. Yes, good morning, everyone else from my side. I'm Benjamin. I'm the managing director of BLOCKROCKET. BLOCKROCKET is, in a nutshell, an accelerator program for blockchain-based blockchain startups, especially within the German ecosystem. So we work together or invest into startups from around the world. So we already have some investments in the US and across the different countries in Europe, but we can help our startups mostly in the German ecosystem at this time. We help with matchmaking and marketing. We do, as I said, seed investments, so mostly pre-seed and seed, basically everything before product market fit. We have some startups we invested also where they almost reach product market fit, so like pre-series A, that's like the maximum. And we also help startups, of course, with operational support. So in some cases with advisory and mentoring, depending on what they need at the current stage. Basically, as I said already, so pre-seed and seed, so we are looking mostly for very talented teams with good ideas. Sometimes have some prototype and some traction, but sometimes it's just the idea, and it's literally like the first days they're working on this project. So because we focus then mostly on teams, also our due diligence is mostly on teams. It's on ideas and teams most of the time. We have around 250 applications per year at this point, which we think is quite a lot given the fact that the blockchain space and early stage startups in that space is still quite niche. Of course, it's a bet on the future. So we think that this market will strongly increase also in correlation with the adoption of blockchain technology itself. We have around 10 investments per year. We invest tickets usually ranging from 100 up to 500K by now. Usually it's in the 200 to 300K range, so we're quite flexible on that side as well. We have more than 250 partnerships, so we're basically in collaboration with everyone who is in touch with the blockchain ecosystem with some rank in the German context. So from media partners, consultants, other VCs, universities, corporates, banks, etc. We have a variety of events, so at least 2 events per month at this point. Everything online. Once COVID gets back to normal, we'll also continue our offline events, maybe also a bigger conference next year. And we have, of course, a big online conference planned for the end of this year. It's the Blockchain Awards, so stay tuned for that. Should be in early December. We'll announce that shortly. And for startups, we have a multi-stage application process. So if you're a startup or if you know a startup that could be interesting for our program that's looking for funding, then they can go on a website, they can apply for a program. We usually have a due diligence that takes a few rounds, and investment decisions are on average 4 to 6 weeks. In some cases, we even execute it within 2 to 3 weeks if a startup is really in a hurry. So that's it pretty much from our side, from my side for today. So today we have a monthly pitch event. So quickly for the setup, we have 4 startups pitching, 6 minutes each, 6 minutes Q&A. We have 4 jury members that we invited. And at the end of the event, we will have the ability so the audience has the ability to vote for their favorite startup and as well as a jury member. And we will announce a monthly winner at the end of the event. All right, so I would like to hand over to the jury members to quickly introduce themselves. I would like to start with Wolfgang from the Blockchain Founders Group.
Yes, good morning. I'm the head of the venture capital section at Blockchain Founders Group. And with some detours, I have been in the venture capital industry for about 20 years. I've seen many great technologies emerge, and despite the occasional hiccup, from the market, one thing is clear, that the time has just never been better for great founder teams. And that's why I'm really glad to be here today on the jury with my fellow jury members.
Fantastic. Thank you, Wolfgang. Then we also invited Alexander from EFI Ventures for today.
Thank you. Good morning. My name is Alexander Manze. I'm the Managing Director of EFI Venture, which is an early stage venture capital fund. I'm about 15 years in the sector, mostly finance, with the background here.
Fantastic, thank you. Then we also have Nicholas from Sachsenhammer.
Yeah, very nice to meet you all. Nicholas here. Around 16 years of experience, started out at Credit Suisse, first Boston, later on at Jefferies and BNP Paribas, spent around 8 years in London, and now came back to my native Germany, based here between Munich and Berlin, right now in the Munich office, which I'm leading. At Sachsenhammer Co, we basically help companies with funding and M&A, and do a lot of also private investment. That's why very, very interesting to see what kind of companies are presenting today. And as Wolfgang mentioned, it's a good environment. We just talked about it, very friendly. So yeah, let's enjoy it while it lasts. Yeah.
Fantastic, thanks, Nicholas. And lastly, Valentin from Blackwood Capital Partners.
Yes, thank you. So I'm Valentin Berg, investment analyst at Blackwood Capital Partners. We are Copenhagen-based venture investors, representing a network of high net worth individuals across mainly Scandinavia. We are sector agnostic, so not only interested in the blockchain domain, but going across all sectors. I agree with the jury members that right now is the right timing to look for nice investments. And yeah, what we basically want to do is provide revolutionary startups with the network that our members provides in terms of smart capital and perhaps board positions. So looking forward to today.
Fantastic. Then yeah, let's get started with the first startup. We have Giada from EcoSteer.
Good morning to everyone. And thank you, first of all, for inviting me. Good. I'm Giada Zanatta from EcoSteer, a startup in the data ownership and monetization field. And our technology lays the technical foundation for a new decentralized and distributed data economy. Today, today, real-time consumers data produced by IoT device has a huge economic value, but privacy laws limit any opportunity to monetize it. The reason is of a technical nature. All the current IT data sharing infrastructure are technically centralized, as they have exclusive control over third-party access to consumers' data. And this is not aligned with the GDPR that mandate full transparency over data transmission chain. And so one single generic consent at the beginning of the chain is not more admissible. To reconcile privacy laws and business opportunity is needed a completely shift of paradigm. From the protection of data set at the collection point, as we are used today, to the protection of real-time data stream since the generation point, any IoT device. And this is the only way to turn privacy laws from an obstacle into an opportunity. And this is what our data ownership platform does. Our technology is an overlay network that uses end-to-end encryption and blockchain smart contract to decentralize data access control, putting it back into the hands of the rightful data owners. And this technology has been granted a US patent in only 2 months. This video, actually, I want to show this video that demonstrates the innovation. Today, any data sharing platform has exclusive control over third-party access to consumers' data. With our technology, data is encrypted at its source, it flows encrypted, and it can only be decrypted at its point of usage, any data user application, with the explicit consent of the data owner. Consent that is given and revoked at any time through a blockchain smart contract. And so this technology technically implements the so-called neutral server or neutral data intermediary as described in the European Data Governance Act, enabling any company to deploy GDPR compliant data exchange app, where any data owner, any consumer can personally and unilaterally decide which third parties can access his or her data. And it is also possible to add a compensation mechanism based on tokens, where any data owner can grant visibility over his or her real-time data stream in exchange of tokens and spend this token on the same corporate data stream marketplace. And this is exactly the business case that Alperia, an Italian utility and our first client, is creating thanks to our technology. We offer the data ownership platform with a software license priced according to the number of connected devices. And so we enable our client to create their own business cases. Our vision is to have the data ownership platform installed on any device on the planet, thus becoming a universal means to control third-party access to personal data. However, we are starting small and we are targeting energy and insurance companies in Italy and South Europe. In terms of competition, we are in a market occupied by two kinds of solutions. On one side, data vault that control access only over static data set. On the other, data marketplaces, still based on decentralized IT architecture I mentioned at the beginning. Our data ownership platform is a complementary technology that can offer a data ownership layer to any existing data sharing and monetization solution, making them GDPR compliant by design. This is our team. It's still a small team, but with all the competencies we need to grow from IT, legal, business. And together, we were able to raise 800K from private and public funds to fully develop and validate this product and obtain 2 US patent granted. We have also partnership agreement with system integrators such as Entity Data, HP, and PwC. We are now seeking strategic partner to support this phase where we need to industrialize the technology and develop the business. Thank you for your attention, and let's build a new decentralized and distributed data economy together. Thank you. I'm very happy to answer to your question.
Fantastic. Thanks for your pitch. Do you have some questions on the jury side?
Thanks, Rana. Maybe I'll just kick off. What are the key challenges that you're facing in your business? What are you fighting against or struggling with every day?
Our technology, first of all, I would say money. The first, seeking money, or better, finding the right investor at the right time is not easy, because we are a B2B solution. We target big clients, and so the typical sales cycle is not so short. It can take, a long time. And data ownership is really a new concept. It's really a new concept, but it is the only way to turn privacy laws from an obstacle into an opportunity. And so we are seeking investors that understand the value that our technology can unlock. And in fact, we can support, first of all, European company, but then all companies of the world to first solve the problem of compliance and turn compliance into a business opportunity, an opportunity to create new business model based on data, where consumers are actually part of the data value chain.
Thank you.
You're welcome.
We have one audience question. How are the IoT devices connected? Like anchored to the blockchain, which blockchain? Ethereum, Cardano, others, etc.
Okay, our technology is made by two components, so end-to-end encryption and smart contracts. So in terms of blockchain, we use only the smart contract. We do not use the ledger to transport data. Our software will be installed on any device as a simply software upgrade. And in terms of which kind of blockchain, as we started in 2018, at that time, Ethereum was the blockchain with most traction. And so we decide to start with Ethereum. However, we are completely agnostic, and so we can use any kind of blockchain. Now we are integrating Algorand smart contract, and we have a roadmap with other blockchain.
Understood.
You guys, so probably just one question. Are you guys facing a lot of backlash from the industry? Because obviously a lot of companies depend on the data collection. And I think some of them will probably not like that it's like too prominently featured this whole data problem, which is just currently just absorbing. Because you're obviously pointing a bit of the finger at a weak point of some of these companies, right?
Actually, of course, we used to highlight the business opportunity of our technology. However, especially in Europe, many companies are receiving huge fines from the privacy grant. And so they are actually seeking a solution such as ours to solve the compliance issue and be able to continue to use data.
Makes sense.
All right. Any other questions?
Are you also addressing the healthcare system or healthcare data, Giada?
So our data ownership platform is completely horizontal, so it can be integrated with any kind of IoT device. It could be any body tracker, and so I would say yes, but today we are targeting mainly energy and utility sector, and the mobility, especially insurances providing usage-based insurance, so using aftermarket telematics. We are also receiving a lot of interest from the financial sector, so banks that want to share and monetize, to enable clients to share and monetize shopping data. But of course, in a near future, we will target also the healthcare.
Okay, thanks.
I would say the pharmaceutical companies today are a little bit back compared to other sector. But you know, the market is moving really fast in any sector, and so I think that quite soon we will add some prospect in that sector.
Fantastic. And there's a few more audience questions, and we have to move on, unfortunately, for timing reasons. So
thank you for.
You can, Giada, you can also reply to them in the chat. Otherwise, of course, they can also reach out to you to ask you.
Thank you.
Thank you very much for your pitch. Yeah. Then second for today will be Nihat from, and please help me out here to, how do I pronounce it? Yaliyomo as your company, or what's the correct pronunciation? I think you can introduce it better than me.
Yeah, it's Yaliyomo. Actually, it's in Swahili language, and it means content. And this is what we do for a living. So let me share my screen. Okay, here we go. Okay, excellent. Good morning, everyone. I'm really glad to be part of this interesting and very exciting meeting. Yaliyomo, as a content management company, as a platform, we leverage the blockchain. And the blockchain, based on my last 20 years of experience managing product content behind the barcodes globally in 64 countries, in 16 languages, is, I think, the new era, whereas leveraging the immutable record keeping of blockchain, we truly think that the brands, the companies, the retailers, many organizations can absolutely provide a trust to the end users, the consumers, and even in some cases, the NGOs, the governments, and to comply with many requests. Therefore, we are a blockchain company, manage product content, and by doing that, we are definitely losing our past experience. Our initial focus has been the luxury retail. There are many, many issues that we really see in the luxury retail business. For instance, the revenue loss coming from the counterfeits, as well as trying to keep the product integrity, product overall the brand integrity alongside with the product integrity, and more importantly, having a customer relationship even after the first sell is key challenges. I mean, 95% of the time, the luxury retail lose their control and relationship with their customers after the first sell. So blockchain and our content platform is an excellent solution for all these challenges. So the way that we really look at this as a product agnostic world, like any type of high valued asset, we will call it digital asset, could be part of our app driven blockchain platform. Here is my digital wallet. As you see, I have various brands that I can keep it. And the way that it works is that with this simple app that the customers can download free of charge, it can be branded, white label, can really look at the entire history of the product, as well as that the ownership claim through the smart contracts and in their digital wallet, whereas they can also do the second and third hand sell. The way it works is that the minute that the high valued asset is produced, here you see a Fendi bag, we immediately create an NFT, digital sibling, in our blockchain, whereas we bring that digital record to the physical world by simply issuing a QR code. And then thereafter, the rest is simply the history. Through the app, the customer can scan the QR code and they can do many things. For instance, checking the 100% authenticity of the product. They can completely manage their product, their assets in their digital wallet. For instance, discouraging the theft. You have a high valued bike, you can just mark it as it's stolen so nobody can really try to sell it. If another customer has the QR code scanning as the app, then they can see it. But what excites us most is also the enabling the brands to communicate the consumer through the app. The minute that the customer buys this Fendi bag or any high valued asset, to maintain a connection, to creating an ecosystem, to creating a loyalty, being able to communicate with them through the app, saying, hey, my new season collection is here, please come to our nearby store and then buy it because you already have the similar one. And by that, they can also, the brands can also really communicate their supply chain visibility. For instance, this Fendi bag, the leather that they are purchasing from Italy, the factory that they are purchasing is completely child labor free, or they pay the fair trade prices. And the way that we work on that is the minute that Fendi buys that leather in that Italian factory, we immediately create an NFT. And thereafter, every part of that bag, we just create a new NFTs. And at the end, with the QR code scanning through our app, you will not only see the authenticity of the product, you will not only claim the ownership or enabling brand to communicate with the consumer can also provide their entire supply chain and give that record to an immutable way to their consumer, which at the end, they'll have also an ability to prove their corporate social responsibility. Meaning that this particular Fendi bag, the leather I use and the way that I bought this in Italy is not only on the fair trade, I pay the right prices, but I also have the complete auditing. And here is a certificate, goes with this particular bag, is a completely child labor free. And the customers can carry this to their websites. And then we are very excited about this because the total addressable market is over 100 billion. And just the protecting the brand integrity or the product integrity, we estimate the market to be like close to the 20 billion. And therefore, like looking at our very simple pricing model, just like counting and tracking the NFTs through our app, as well as opening the supply chain to the various the suppliers that the brand works with, we are really looking at SaaS-based simple license model. And then by looking at that, and we say, even if the luxury retail business, if you look at the top 20% globally, and if you take that just the 3% of that, we really project to create close to 20 million next 5 years. And this product, since it's completely a product agnostic, can apply to many different industries as well. Today, we have 3 full paying customers, and one of them is a very high-end tequila company in Mexico City. Each bottle of tequila, they sell it as over €1,000. And therefore, we are very excited to see that when we talk about the luxury retail, we're not just talking to Louis Vuitton's, Gucci's, Rolex. We are also talking about really high-end spirit market, high-end art market, high-end like bikes, that there is a company that we're talking in Paris. They want to really track their high-end bikes. Therefore, we are very excited, and therefore we have like 6 pilots that we are running today. And then we are hoping to have a much more real customers. And yesterday we announced another one, Organic Garden here in Germany, who will track their entire garlic production to the consumer, just looking into the transparency in their supply chain. What we are looking for is that we're looking at strategic investors, somewhere to raise between 1.5 and 2.5 million in this quarter. And then that will give us like good 18, 24 months runway. And we know exactly where to spend that money by dime next 3 years. And then our team is myself and my partner. We are located here in Cologne, but we have over 50 years of experience, pure product content, product development, and pure management governance of the data, and now with the blockchain technology. And we also have a very global advisory board, because we do know that this particular industry and content management is a global one. And therefore, like we have board members from Japan to US to all around to Europe. So I just want to thank you all for the time, and just want to move on to the questions. And I hope you'll have now the good understanding of what we're trying to do.
Thank you, Nihat. Questions?
Yes, thank you for the presentation, Nihat. Can you give me some insights into the adoption process for brands? So how much time and effort does it cost them to incorporate the Yaliyomo platform?
Excellent question. It usually takes a little longer than the normal SaaS selling processes, the value selling processes. The reason is that our technology really touches multiple departments. It's not just a finance tool that the finance department can purchase it. This particular tool can help the marketing department, legal department, sales department. Definitely technology has to involve, so the brand integrity and all that. So usually it takes between 3 to 4 months to complete sell. And adoption is the fastest side, because it's all API based, it's very much app based, and we can really integrate based on our last 20 years experience, any type of backend systems like the CRMs and ERPs. But the advantage of this is that stickiness of this business is amazing. And 92 to 93%, we predict the customers that be part of us will remain with us. And to your point, Valentin, is that when they become a customer, the technology and the pricing is absolutely never a barrier. Change management is the topic that we have to deal with.
See, thank you.
Sure, my pleasure.
Nihat, thanks. That's probably the most beautifully animated presentation I've ever seen. Thanks very much. I have one question. I mean, over the years, I've seen quite a few solutions where companies try to verify the authenticity of products. Now, I understand, obviously, blockchain opens completely new possibilities, but you've probably researched quite a few of them. Why do you think they have failed and you stand a much better chance?
Wolfgang, the key thing here is that the simplicity of the implementation of the product, which is just like once we have the record in the blockchain, then having that QR code to put in somewhere that's easy for the brands. And then that's it. As you see on the top of this particular slide, in addition to QR code that we are proposing Fendi to put their ID card that goes with each bag, it could be a metal plate, as you see here, that can go onto the bikes. Or Prada is planning to have a really little fabric goes with their normal label. The company here in Germany, we are talking importing the tea from China. They will just use the NFC tag. Therefore, I think our advantage will be the simplicity of the adoption and implementation of that simple QR code solving the issues. in the past, like many companies, there is a company in Italy like trying to solve this with RFID tag, with Valentino and other type of brands. That's really a really costly plus difficult to implement process.
Maybe one final question from the audience, and like this ties a bit, I think, to Wolfgang's questions as well. Like, who are then currently the main competitors that you would see? Or like, who comes closest to what you're doing right now?
There are companies like LVMH, which is the holding company of Louis Vuitton, claim that they will do their own blockchain traceability and doing exactly what we do through their own system. And Breitling, the watch company, said exactly the same thing. They want to do their own. But now we see more and more there are consortiums being built. So there are one consortium in France, another one is about to be established in Italy, could be our competition, but we are really early in the market, and therefore, like, we feel that if we can move fast enough, next 3 to 6 months, we will have the advantage of the first-time buyer. So consortiums are our competition.
Understood. All right. Thank you, Nihat. Then
my pleasure.
A few more questions open in the chat, and feel free to reply to them for the audience.
Sure.
And yeah, thanks for being here, and thanks for
your
day. Then let's move on with the next pitch, which would be Jonathan from Float Capital.
Hey everyone, hope you're all having a fantastic day so far. Let me pop that up. My name's John, and I'm here from Float Capital, and put super simply, we are synthetic assets, and this is a really exciting space. Honestly, over the last 2 years, it's continued to rocket, and we feel it's going to continue to grow, and there's so much potential in this space. If you don't know what a synthetic asset is, essentially it just allows you to get exposure to practically any asset class that exists. It's really easy for users to build a portfolio of exciting and innovative assets, and that's what we do for users. So the current problem in the space with synthetic assets that exist is it's extremely difficult, often leading to a lack of scaling. Just for example, if you look on the right-hand side there, over collateralization, you have to lock up a whole lot of collateral into a debt position in order to mint an asset, whether this be synthetic gold or synthetic S&P 500. And effectively, you have a CDP, a collateralized debt position. You can be liquidated. And all of these financial primitives are extremely hard for general individuals to navigate and actually get involved in terms of scaling this industry. So how we solve that is really reimagining the synthetic asset space. Any user is able to mint a synthetic asset just in a couple clicks. You can see our UI on the left there. You're able to take a long position or a short position, put in your amount of dollars, and get it just like that. It's also safe. There's no CDPs or liquidations like we've talked about. And finally, it's really efficient. It's a suite of smart contracts that are engineered very smartly to be perpetual in the way positions are taken, so they roll over and liquidity is sticky, as well as there being very little barriers of fees, and it really providing a lot of efficiencies compared to traditional solutions. Under the hood, to make this happen, I won't go into this too much, but we have an incentives-based perpetual futures contract, and based on demand and supply, market liquidity, and long and short positions, we algorithmically adjusting incentives and having these incentives flow to various actors who take positions in our markets. Again, we can ask this more in the questions, but I won't go too much into the technical details as it's pretty mathematical. This is probably the most exciting part of the presentation to be far. The industry we are in is really one to watch out for. DeFi synthetic assets, as you already know, over the last 2 years, extreme growth. You can see for synthetic asset protocols there going from $26 million locked all the way up to nearly $4 billion. That's 150x in the last 2 years. And that trajectory is going to continue by our predictions, and it's just getting started. If you look at that right-hand chunk over there, the traditional finance derivatives market sitting at a massive 640 trillion in notional value. And I mean, that's 0.0002% too many zeros, 6%, the amount that synthetic asset protocols account for. And of course, we might not capture all of that, but there's certainly space for the synthetic asset protocol industry to really grow and capture a lot of this in the next couple of years. So we'll talk a bit about our roadmap and where we are. In Q1, we really formalized the mechanisms, put a lot of work into the math, got the UI up and running, and really showed that the beta we're building is something to be excited about and look out for. That led to our initial seed funding round of $1 million. It helped us expand our team. It helped us form key partnerships in the blockchain industry, Aave, Chainlink, POAP, The Graph, amongst just some of them. And that's also then now led on to Q3, where we've had our smart contracts audited in a smart contracting auditing competition called C4, alongside the likes of SushiSwap, who currently running their audit there, Pool Together, Notional, BadgerDAO, Convex, really the big players in the DeFi industry. And that's all culminating in alpha launch, which will allow us to really test our incentives and get our product out in the wild in just under 8 days now. So to reiterate, we move really fast. We believe in launching, getting users feedback, doing it safely through audits, and bringing products and scaling them rapidly. You'll see in our next quarters, we have lots of more plans to innovate and continue growing the financial markets. So there's a lot of excitement and things in store in our roadmap. A bit about quickly the founding team, myself, Denim, Jason. We've been working in the blockchain industry for more than 3 years together as a team. And some of the things we've done, you'll see in the consulting experience there, Pool Together, Gnosis Safe, async art. We've architected systems, we've audited smart contracts. Some of the systems we've actually architected and deployed are currently handling more than $75 million in the blockchain space today, and they're live in production, no issues so far. And more than that, we've also participated in our own ventures in the ETH Global Hackathons over the last 3 years in different continents. We've managed to win these in Berlin, London, Bangalore, Turin, Cape Town. That's allowed us to present at events in Davos, New York, and Paris. And of course, we created Wildcards, an NFT protocol that's raised more than $200,000 for conservation globally, and has successfully been running on mainnet and Polygon for a number of years now in the blockchain space. Overall, our team is extremely strong and, of course, fun and exciting. We have a large contingent of our team focused on technology, which really allows us to ship fast, iterate, and drive the core value of the business forward. So this is our tech team. And yeah, our business model is something that's really exciting as well. Obviously, being a DeFi native protocol, it's important to think about these things, but they often differ from traditional financial models. We'll be taking a 25% allocation of the issuance of float tokens, which is something we can get into. And float tokens are issued as incentives to users based on the liquidity of market positions and how that is balanced or imbalanced. And that's basically dollar capital locked over time in the protocol that allows users to generate these tokens. And we just take a small margin of those tokens generated on top of what the users actually mint. So from day one, there won't be any fees necessarily in minting, but that is a module we've already baked into our smart contracts. So it's something we're able to tinker with and go live when we feel we're at the right time to do so. So quickly, what we're looking for is $10 million to fund the growth and bootstrap our initial liquidity. As we said, we're in a position where we've raised recently over the last few months and we're quite cash strong. So what we'd rather do is over the next few months, build a strategic round based on investors we feel really align with our vision and help us meet our goal to capitalize on an industry that's really got massive potential to scale in the coming years. And we feel we're in a prime position to be at the forefront and leading that scaling. You can also see we put a fair percentage for legal and compliance. Obviously, that's something that we're paying close attention to given the general climate. And yeah, I think that's a great point to leave it at there for questions. My name's John. As I said, we're building the future of synthetic assets, and we're really excited to answer your questions and hear more about what you have to say. Whip out your phones, scan the QR code while you're at it, join our Discord. We're always open to chat. And yeah, love to chat more.
Thank you, Jonathan. Maybe quick question, just to get it straight. Are you raising on the token sale, or is it an equity investment?
Yeah. So we're raising on the tokens, although we do have, based on, as we said, we've put a lot of thought into the legal structures. I see some questions coming in with the likes of SEC, etc. We've incorporated, etc., in jurisdictions that we feel are favorable. But yeah, it's for a percentage of the token. So it's a token play.
Okay, and maybe to also start this with a audience question right away. Hashtag elephant in the room, SEC, BaFin, like how do you plan to deal with regulatory entities in this context?
Yeah, so I'm reading the question more, and it says, do we plan to decentralize it via a DAO? That is the case. We've built DAOs before, and we're very strong in our sense that we would like it to be governed and brought forward more and more by the community. We believe day one, to get it going and bootstrapping, a DAO doesn't always make sense right off the ground on day one, but in the first, second, third month, as we're able to build that infrastructure and guide it completely, that is the goal and where we would like to go for. With the SEC, that's a great question, and I think it's something everyone is looking at very closely. You would have to have not seen it, but there's loads of developments that have been happening recently about inquiries into Uniswap, etc., like that. So that's why we put aside already from our previous raise more than $50,000 just for initial legal fees of understanding the landscape. We've spoken to lots of interesting individuals with their insights already, and we're earmarking a large amount to look further into it. But yeah, that is something that's definitely on our radar, and we're keeping a close eye on. We've already put in provisions to exclude investors from certain regions from day one as well. But yeah, it's a good question, and it's something we'll just basically say we're monitoring closely.
Thank you. Any questions from the jury at this point? Otherwise, I have one last audience questions that just came in. You mentioned the problem of over-collateralization and liquidation on your first slide. How exactly is Float solving that?
Yeah, that's great. So I'm going to try not get too technical on this one. It would need quite a while to explain it. But essentially what we have is a peer-to-peer model where you have users taking long positions on a certain asset, and you have users taking short positions on a certain asset. And based on the liquidity or volume of long and short positions on an asset, if they were purely equal, we have equal and opposite positions on an asset, and value can flow perfectly between users without the need for over collateralization. Obviously, we expect different volumes of long and short positions on certain asset classes. That's just the nature of finance. And when we receive those different volumes, that's where we provide really strong incentives to actually balance the liquidity in the order book. So all the underlying liquidity is actually lent out via a platform called Aave. You might have heard of, and that allows users who take favorable positions in the market to basically earn really sort of escalated, I would say, leveraged yield on their capital that they provide. So it's completely different to the CDP model. You're not locking in capital to mint something. You're putting in what you would like to mint, but your exposure to the underlying synthetic asset may float. It's much like an algorithmic stablecoin where we incentivize it to hover around a peg, but it might not always be at exactly that peg.
Right. I think Nicholas, I think
a quick question. Yeah, I wanted to ask about like recent case studies or something, or stuff that you have worked on in the past too, because obviously it's a bit abstract, the whole thing. So it would be good to understand a bit what kind of stuff you have done in the past, just to see where you normally use this.
Okay, are you talking about, sorry, very quickly, in the synthetic assets specifically, or our team?
No, for you, what kind of like stuff you have issued in recently, or projects that you have worked on? Just a bit like more to, because the concept is a bit abstract, so it would be good to see what you have done and what exactly this has led to.
Yeah, so we've done lots of different things, as we said, some in the NFT space, all very blockchain native, a lot of DeFi protocols. Wildcards created a model based on harbor tax, which you might be aware of. It's based on a 2019 publication by Glenn Weil called Radical Markets. And what it does is it allows you to have assets that are always on sale. So as you buy an NFT, you immediately have to set the selling price for it, and you pay a percentage of harbor tax in order to custody that NFT or that asset. And this is basically one of the first use cases we've seen in the wild of people having asset classes that can be always perpetually on sale, and users have to pay to keep custody of their own asset. The idea that it really helps with, efficient allocation of capital. So that's another complex financial primitive we've engineered. We've launched it, it's scaled, it's working on wildcards right now. And as we said, we've hit up over $200,000 that we've managed to raise through that mechanism. That's really a world first. And this was another opportunity we identified by assessing other synthetic asset protocols and coming up with our own unique approach toward it.
All right, thank you. Thanks for your pitch, Jonathan. If there's more questions,
awesome.
Feel free to reach out to him directly. We have to move on.
Thanks so much.
Yeah, you're welcome. I have to move on to the last pitch for today. We have Cindy from Umazi.
Thank you very much. I'm going to share my screen. So it seems like we're a bit UK as well as South African heavy today. So from John Joe to Cindy and Kyle from Umazi. So I'm the co-founder and sorry, can everybody see my screen? Sorry.
Yes, full screen works. Yeah, you can go.
Okay. Oh, sorry. I'm just double checking.
No, it's gone.
Okay. Sorry, I lost it there for a second, which is why I was asking.
No worries, no worries.
So I'm also joined by Kyle today, which is co-founder and CTO from Umazi. What is Umazi doing? We're effectively trying to revolutionize the due diligence processes across industries by creating a decentralized service. Our aim is to create a network of trust between businesses and clients. Now, the problem is that corporates generally are faced with reproducing due diligence credentials periodically, effectively in silos. According to Accenture, it can take up to 150 days to sometimes go through a complete due diligence process. Some due diligence assessments also requires corporates to reproduce over 100 pieces of documents. And then according to another industry consultant, this process is generally less than 50% digitized. With the average corporate that has over 8 institutional relationships and a global corporation averaging between global average number of corporates of about 40,000 clients, it means that there's an unprecedented amount of duplication using unstructured as well as untrusted data. For Umazi, we solved the problem by leveraging existing regulated siloed business processes, enabling the corporate clients to effectively own a verified validated identity through a trusted network. The corporate identity is effectively representative of their underlying corporate due diligence credentials, validated and verified as part of a regulatory approved business process. Once validated, the credentials are then tokenized to enable that secure credential sharing verification process. The reusable identity by design remove the duplicative efforts and break down those siloed repetitive processes, while allowing the corporates to maintain ownership of their own data through self-sovereign identification. We seamlessly integrate with any of the existing solutions within the compliance space. So we're effectively not looking to compete with anybody in this space. We in fact actually have partnered with 3 of the key players on this chart already. A bit of our traction, we are currently in process with 2 pilots with 2 specific different use cases in 2 different regions. We're also negotiating a 3rd use case pilot, as well as the early recurring revenue adopter. Aside from that, we've still got a number of other clients that's waiting along in the pipeline, ranging across the various industries. Our pipeline conversations mainly originates from our network and past work experience, But like our third pilot client, we're also seeing again organic inbound requests coming in. A bit of a snippet on what some of the clients are saying, ranging from very manual due diligence processes that covers 7-tab Excel spreadsheets to a due diligence process that covers 7 weeks over a due diligence process run by 78 people. In short, Umazi allows for the cross-industry sharing of due diligence results in a transparent but cost-effective way that is both regulatory and regionally agnostic. We provide that solution that facilitates that real-time transparent credential updates and verification, but while allowing the corporate to maintain ownership of their data. Our business model is that of a network facilitator between corporate clients, institutions, and trusted third-party validators. And we expect to earn revenue eventually from all of these through a tier-based subscription model. The market opportunity for us is fairly large. It's not sector or regional specific. We're also currently focused on mainly institutions and organizations who's recently come into scope of any of the anti-money laundering directives. We have also taken the time to articulate the revenue potential of Umazi, but in the interest of time, I'm actually going to skip forward and go through to the team slide. Our team consists of industry experts from the finance industry to disruptive tech, supplemented with startup experience and business development. The team has been forged based on previous experience of working together in the past, and we all share a passion for streamlining business processes. The team is further supplemented by Founders Factory, having joined Founders Factory recently, who's basically taken on a pseudo marketing, biz dev, and strategy roles. This enables us to selectively and strategically hire the next key hires for Umazi. We are currently looking to raise funds to effectively ensure that the product is production ready for wider adoption. We aim to have this active pilot clients on the platform before the end of the year, but also will ensure need marketing and sales focus to ensure that we actually maintain the traction that we've had so far. And I'll take any questions.
Fantastic. Thanks, Cindy. And maybe before we head over to the questions, I think now's the right time to activate the voting. And then while we conclude the voting in our backend, then we can jump to the questions. So right now for the participants, you can vote for which startup pitch you enjoyed the most for today. Take like 30 seconds. In the meantime, I would ask the jury to fill out the form that we have sent them. It's a Google form that we send you access to. Should take you only like half a minute. And once you're done, you can already start asking your questions if you like.
So I think we've got a question from Alexandra.
Yes, you can already answer it if you want.
Sure. So Alexandra, you're asking if we're client-specific risk-based due diligence processes or standardized KYC. It's both. So from our perspective is we actually look at the standardized due diligence processes. So the example of what I mentioned in doing our pilots, we've got a law firm that covers that standard KYC AML due diligence process. But then on the other side, we're actually working with a global insurance firm looking to help facilitate the due diligence process around supplier onboarding and making sure that they actually onboard credible suppliers that isn't going to get into trouble or get them into trouble a few months down the line. Does that answer your question, Alexander?
I think it should answer the question. It comes from the audience, by the way. So if Alexandra answers the questions, then that's always pulled from the audience.
Great.
Fantastic.
Yeah, probably just one question from my side. I mean, I think it's a great idea to streamline a bit this due diligence process, because I mean, when you all these banks, I mean, as you know, I think you worked at also some. I mean, it's a huge effort. But I mean, have you spoken to a couple of banks in regards to that? I mean, are they open to this? Because obviously sharing any information with a competitor is always a bit tricky, even if it's a standardized way of making it easier. But I mean, have you already received feedback on the market in that sense?
Yes, we have. So we've actually recently graduated from FinTech Innovation Lab, which is run by Accenture. And through that FinTech Innovation Lab, we actually had interaction with a lot of the financial institutions. One institution specifically responded to the Umazi product by saying, this is something that their clients are starting to ask for, because the clients are subjected to not that just that initial due diligence, but then they have to go through that refresh process that a financial institution, from a regulatory standpoint perspective, have to comply with. So the corporate is basically having to reproduce the information that they've literally given to them a few months ago as part of that KYC refresh process. So in order to help strengthen client retention, FIs is actually starting to look at this process where they can help facilitate the client to reuse some of those credentials in a secure way.
It makes sense. Yeah, thank you.
No problem.
Fantastic. Any more questions? Room for one more question, in case there's one. Otherwise, we can also conclude here. It's fine. Yeah, so we concluded. So thanks everyone for the pitches. We have concluded the votes. It's a pretty close call, but eventually the monthly pitch goes to Umazi. So Cindy, thanks for your pitch. Well done.
Thank you.
We contact you for some social media outreach and some article right after. So happy to move forward from there. Yeah, so at this point, again, thanks to everyone. Thanks to all the staffs for pitching. Thanks for being here today. Thanks for the jury members for taking the time. As always, every month, I think always some interesting insights to new business models and ideas. Looking forward already to next event. So we have this on a monthly basis. We will have an annual event in December that we announce shortly, like a blockchain startup award. So also to all the staffs that are here today, you can also apply and take part in our annual event. We will invite 30 startups in different categories with 3 different categories, 30 startups, more than 10 jury members with a BlockRocket award that we will hand out at the end of the year, basically for the newcomers of the year. Then that's it. And see you for the next event. Thanks everyone, guys.